Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the first bullish scenario where we're looking for an expanding diagonal towards the upside. Now, expanding structures in general are very rare structures in Elliott Waves and therefore never really have high probabilities of playing out, but at least it's something we have to consider now with this move to the upside because the other bullish structures are failing. A normal regular impulsive structure isn't allowed to have overlap between wave 1 and wave 4, which is the case. In a diagonal, most commonly the trend lines are converging, but we can't over here, and in a double 1-2, preferably the second wave 1 and second wave 2 are not longer in time and price compared to the first 1 and 2, which should be a higher degree Elliott Wave count. So that leaves us with the expanding diagonal structure over here. Now in this scenario, this wave 2 retraced to the 0.5, which is a little bit of a less common target in an expanding diagonal, but a target nonetheless. The golden pocket, however, is a common target, but we just missed out on hitting the golden pocket. Wave 3 should be longer than wave 1, which it is. It tagged the 1-to-1 over here, taken from the low to the high of 1 to the low of wave 2, so that is very nice. This wave 4 should retrace to the golden pocket 786 or the 886 most commonly. Well, it hit over here the 786, and if it moves down, there's still the 886 as well. So this is all nice. The invalidation of this scenario, however, is if price is going to dip below the low over here of wave 2, because that is not allowed. And then we want to see a move towards the upside for wave 5. Now wave 5 should be longer in price than wave 3. So take a trend-based fib extension from the low to the high of 3 to the current low at least over here of this potential wave 4. And that gives us a target between 29.1k and the 1.618 is usually like a maximum target, 30.7k. And you see we have a couple of extra additional resistance areas in that area. So 29.1 to 29.4. 29.7 to 29.8 and then 30.4 to 30.6 for then the end of a wave 1. Then you want to see a corrective structure in a wave 2 before then continuation to much higher prices. Because this scenario is very rare in general and has low probabilities, I do want to at least show you this particular scenario, even though it is very, very early. So Mas2 in the group yesterday posted this scenario, and this is his chart over here. So on the medium time frame, looking for wave A, B, C, a flat structure, finished, and then he's looking for 1, 2, 3, 4, 5, with the first move to the upside being a 3-wave structure. Now the medium time frame, I won't cover it in this video, but at the moment probabilities are still higher. We're going to dip towards the downside and find new lows, but I do like the forward way of thinking and thinking about a different structure than a contracting diagonal over, or a expanding diagonal over here. So instead of this, we go back to a contracting structure where this is then a wave 1, ABC, wave 2, ABC, where preferably price finds one more low over here to hit the golden pocket, which is a common target for a wave 2 in a diagonal as well. What we then like to see is a 3-wave move to the upside for a wave 3. So all of the waves are going to be 3-wave structures, zigzags. In wave 3, the 886 and the 786 is an important target taken from the low to the high of 1 to the potential low of wave 2 over here, where the target has a nice confluence with the target box over here, 29.1, 29.4. Then we want to see a bit of a dip for a wave 4 and a continuation for a wave 5, where then the target area 30.4 to 30.5k is going to be very, very important indeed. It is still, as mentioned, very, very early to call this scenario, but it is a scenario we have to keep in the back of our minds. Now, the more bearish scenario, this move to the upside is a retracement, after which we then expect continuation to the downside in a bigger 5-3-5 move to at least take the double bottom over here as well. Now, in this particular scenario, we have then either a finished structure in an ABC, the high of C is in, and we expect a continuation down in a wave 1, 2, and now a bigger wave 3 to the downside. It has to be said that for wave 3, we want to see price moving down impulsively, but we also want to see the volume moving towards the upside. And that is a thing we kind of have to wait for, because at the moment, yes, we are making lower highs and lower lows, and the volume, at least locally, was a little bit increasing, but we're not seeing this yet, right? We want to see big candles, a big move, big volume, impulsivity to the downside, but now the weekend is approaching as well. So the fact that the weekend is approaching, it tends to be a ranging structure in the weekends, lowers the probabilities of maybe moving to the downside already in a wave 3, increasing the probabilities we might get a bounce towards the upside, which then also leads us in the bearish scenario to a WXY scenario. So in a WXY scenario, wave Y is a three-wave structure, so you still expect a move to the upside to at least hit the targets around 29K over here. So we do have to keep in mind that even if price moves towards the upside, the bearish scenarios are still going to be active as well. So it's very, very important to see how price moves to the upside, the volume that it has, the structure that it creates, and then we have to observe reactions over here. Now, if we zoom in to the micro and we go to the 1 hour, then over here we have the ABC scenario, which is the bullish scenario. So after an ABC, we then expect a continuation to the upside to at least take the high over here at 28.6K. In this scenario, wave A, 5-wave structure, B, 5-wave structure. And then in wave C, we have over here a wave 1, 2, 1, 2, 3, 4, 5, finishing wave 3, sideways, corrective structure for wave 4, and then eventually looking for another wave 5 to the downside. The most common target for a wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of B. However, wave Cs can definitely, and actually happens quite often, extend to the 1.618, which is sitting at 25.9K, but more importantly, above the 25.9K level, we have this support area over here between 26.2 and 26.3K. And what is nice is that we do have some incredible support with a weekly naked point of control, 26275 over there. And we also have that daily naked point of control at the same level. And we also have a weekly and a daily in that level. So very, very important support. And also down here between the target box 25.7, 25.9, or basically 26K weekly and a monthly, we have, well, basically a weekly and a monthly. We don't have point of controls there. But this is a very, very first area of support over here. Now what you can also see is that I pulled a channel, and a channel is important because if we are looking for a wave 1, 2 and a bigger 3, of course in the bearish scenario, we first of all want to see price moving outside of the channel, but we want to see it moving outside of the channel on volume, right? We want to see a big volume increase. And that is something we have to pay attention to, because at the moment, price moving down, volume moving up. If we get another low on lower volume and then we start to bounce and range during the weekend, probabilities are gonna go up a lot that this is a wave C and we are gonna move up next week. If price makes another low but volume is increasing compared to what you see over here, probabilities are higher. We're going to find continuation in a wave 3. So the volume is going to be very, very important if price moves towards the downside. And I'm talking about downside here as well, as the probabilities for a move down are lower or higher, are higher locally. So in this scenario, what you see in the range locally, price hit the 886, taken from the low to the high. And the 886 is a very rare target for a wave 2, but it is a common target for a wave B or a wave X, meaning that any structure you then get towards the upside has a higher probability of being a wave C or being a wave Y, which then means probabilities are higher. After a wave C or Y is in, you're going to move back towards the downside, because then this whole thing is a corrective structure and you expect the double bottom over here now, but at least this low to be taken once more. And if price takes this low, the support area down here, 26.2, 26.3, is going to be very interesting indeed. Now, if we look at the corrective structure, what is also interesting is that price over here dipped inside this gap. So if I actually pull a wide line over here, you can see we tagged the gap once over here on the 15-minute. Then we closed a candle inside of the gap, tested it again, and then moved down. However, because some candles have closed inside this structure, probabilities are quite high to move at least a bit further, maybe to the upside, and close the gap, which would mean going to the wide line over here, 27K. But also from an Elliott Wave perspective, if you take a trend-based flip from the low to the high to the low over here, then for a wave C and a wave Y, the most common target is between the 1 and the 1.236, which is between 26.9K and 27K. The 0.618 is a bit of a less common target for a wave Y. For a wave C, this is very rare, but for a wave Y, this is still a target to take into account. But I think filling the gap getting to this area over here, maybe even hitting the daily naked point of control with a wick or something, that could be very interesting indeed for then a move back towards the downside. So just the fact that price hit the 886 is increasing the probabilities for price to take the low over here. Now we do have some bullish and bearish CVD divergences. So on the higher time frame, if I zoom out, by the way, we do have bullish CVD divergences, but the more local CVD divergences always have priority. And if we look more locally, you can see it's a bit of a mix. We have the bearish CVD divergences, bullish and another bearish. But what is important is this bearish CVD divergence has one pivot on the left and one on the right of the most recent low, which has then lower probabilities of playing out. The CVD divergences on the right side of a new high or low have the highest probability of playing out. So price moved up, price moved down. The first one that was visible locally after the low was the bullish CVD divergence, which means that compared to the bearish one, which only came in the picture later when price moved up, the bullish CVD has a higher probability of playing out, which increases the probabilities of moving to the upside, and then also increases the probabilities of filling the gap, reaching this target area, maybe the daily naked point of control, and then move to the downside from there. So this is something we at least have to keep in mind. And then finally then, the probabilities of the different scenarios. Now, on the low time frame, the volume, as mentioned, is very, very important if price moves towards the downside to compare an ABC with a 1, 2, and then a wave 3 to the downside. If price moves to the downside and we make a low start ranging over the weekend, but the low is on lower volume, then the move to the downside here, probabilities increase, it's a wave C, and we're going to go up next week. If we make another low, but it is on higher volume compared to the candle over here, then we have to be wary of potentially a wave 3 and continuation to the downside. And on the micro over here, what we are expecting is, well, first of all, we are potentially then looking for another high over here, bullish CVD, filling the gap, maybe even reaching daily naked point of control, common target area, but then we are still moving, or the probabilities are still a lot higher to move towards the downside to at least take this low, and then potentially we might reach this target area over here at 26.2k. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.